Had an interesting question today regarding U.S. payroll that I thought was kind of worth discussing and mentioning. So I just wanted to quickly put together this video to talk about U.S. payroll. The easiest way to explain it is when someone is compensated for their time, traditionally it's paid maybe once a month, once every 2 weeks, maybe twice a month. There's some standard variation as to how it's been being paid on a consistent basis. And that paycheck, when received for that time and labor, may be made up of hourly pay, so for every hour worked they're compensated, or a salary for just being employed here and taking care of certain tasks and responsibilities, whether it takes you 30 hours or 50 hours, you're paid this amount. Sometimes there's things such as commissions. You did certain tasks, therefore you receive some specific gain, or it's maybe a bonus. You achieved a certain goal, so you receive something. These different variations of compensation all accumulate into a paycheck. You're going to get compensated with a paper check or a deposit into your bank account. And when that happens, there's a few things that literally occur as the payroll's being processed by the company. And the first thing is payroll deductions that occur pre-tax. And so there are things that come out of the paycheck that may actually deduct from the person's income before the taxes are calculated. These could be contributions and so forth that need to take place related to perhaps benefits, or maybe contributions for savings such as a retirement plan. These types of things are pre-tax. Once they come out, that remaining balance is then taxable. And there are taxes that are federal and then state and local perhaps. These things are basically taken out to meet the tax liabilities of what that individual owes, and then what's left is what they're going to then receive in their bank account or on the check as something they can now cash and deposit. Now, the thing I want you to understand is these different deductions and taxes are going to vary state to state, person to person, because of the income that they're earning. The tax code may determine that it's more or less than the next person. Just understand that a tax professional and a payroll professional are easily able to figure out what these responsibilities are to help a company or an individual meet whatever requirements are needed. Now, with that in mind, you just need to understand that whenever you're working or being paid, there are going to be these associated deductions and taxes that you can expect, and they're declared. The pay stub will actually clearly state what came out where and to whom, but at the end, this is what you're receiving as an individual. And these things are tracked typically by month, by year, so that you can specifically see how these are coming out and what those totals are. So if you have any questions, definitely talk to your human resource specialist, your payroll specialist, or a tax specialist, and they can generally give you some greater clarification as to what's literally going on with your paycheck after all that hard labor and work you've put in. So just understand this: if it's about business, it is universal. Take care.